And welcome to the VSA Capital Tech and Transitional Energy Podcast. Thursday, May the 15th, halfway through the month. And Phil, how are you?
Very good, thank you very much, Andrew.
There was a completely unnecessary pause there when I was thinking, what shall I say? And then I thought, no, I'll just see that for this. But we're halfway through the month. The sun's shining, all that sort of stuff. Actually, I'm off to New York next week, so we probably won't do one next week. We'll just see. And maybe I'll just slip it in. But anyway, there's a lot of money in New York. In America, there's not a lot. Well, actually, let's start off because as we all know, the London equity markets are very, very tough. Trying to raise capital is a complete and utter nightmare. Now, obviously, Rachel Reeves is currently trying to persuade all these pension funds to force them to have 5 or 10% of their funds in UK equities. And then she goes, this is the bit that gets me. Then she goes, yeah, but it's got to be in private equities. And I go, well, how the bloody hell does that help us? I mean, PE's got enough bloody money as it is already. Well, why are you trying to force them to do that? But then I noticed that they say that they're claiming that AIM is private. Don't know if you've seen this. I mean, AIM isn't private. AIM is quoted equities. Now, I think where she's confused, well, actually, she's confused on a lot of things, particularly the economy and economics. She's not very good at that. Quite how she got the job as Chancellor, I don't know. But the definition of being a listed company, not a lot of people actually understand this completely. I don't know if you remember, Phil, because you are quite old like me. That what there used to be was this thing called the official list, and it was a document the stock exchange produced. I think it started off weekly, maybe it was daily, I don't know. And it was basically like a magazine, and every stockbroker's office had piles of them in the corner, because it was used for probate work and everything. And it was the official list of stocks on the London Stock Exchange. And then when AIM started, AIM stocks didn't go into this document known as the official list. So a listed company is technically a stock that is in the London Stock Exchange official list document. AIM technically is a quoted company, not a listed company. And I'm not sure people always quite understand that definition. I'm sure you did, Phil, didn't you?
You got me there, Andrew, on that one.
So that is why some people would argue that AIM is not listed companies. They're quoted companies, but that is why there's an interesting definition there. Anyway, I think it's very confusing. Well, Rachel Reeves is very confusing. But people need to, it doesn't help when you don't clarify these things and explain it. But look, it's very simple. Never force anybody to do something against their will. It will not work. If you want to get people to put money into the UK equity market, you have to make it attractive. It's as simple as that. Make it attractive and people will do it. You make it attractive by, giving tax incentives or taking away capital gains. Certainly should remove the stamp duty. Stamp duty is removed on AIM stocks, actually, anyway. And by the way, when I say AIM, I do include Aquis, because Aquis has the same rules as AIM. But you've just got to make it attractive, and then money will flow there. It's as simple as that. But clearly, Rachel from accounts, and actually, in fairness, the last Conservative government did not understand that whatsoever. Luckily, and I don't want to get into a party political broadcast here, but I think Reform do understand that, and Reform will be the next government of the United Kingdom, in my view. Now, moving on to another topic, which I wanted to just talk about a little bit, because there's a few little bits of news. You may have seen, Phil, that British Airways have invested £100 million into AI to try and stop delays on flights. Did you pick that up?
Yeah, and I've been at various technical conferences this week, and the subject of AI has been widely discussed. Yeah.
So, they're obviously using it basically to analyze flight movements, so that if a plane gets delayed, then they can reschedule all the other planes and try and get them to the right gate, so a gate that's closer to speed things up. £100 million into AI. But the reason this leads it on to is that a lot of people know that I've been looking at Aurrigo, which does these autonomous baggage and cargo vehicles for airports. And we've talked a little bit about it on this podcast already. And funny enough, I was having lunch yesterday with somebody who I think knows more about the travel industry than anybody else in the world probably, and has made hundreds of millions out of it. And he is totally in line with my thinking. He lives in Dubai. Dubai is quite an interesting place for everything that's going on in terms of development of new technology as well. But the point is that autonomy and AI is moving into the air side of airports. We've discussed it before. And of course, it's a massive market. Now, Aurrigo, there are a few other people trying to do it, but Aurrigo is the world leader. They've got figures coming up very soon, very, very soon. Not exactly quite sure when. Probably should do. My fault. So when you read them, though, obviously they look backwards, and you read about history. What you've got to do with this company is look forwards, which is what actually Joanne Hart did in the Midas column the other day. She wrote it up, and the stock basically doubled because the size of the market for taking airside autonomous, which if you think about it is so logical. There was a great article actually in the I think it was the United Arab Emirates National News business section about Donata, which is part of the Emirates group. As you can imagine, I think most people know that they're building this massive new airport out in Dubai. And Emirates is basically one of the largest airlines in the world as well. I mean, they're so advanced in what they do, it's unbelievable. But they want to be able to take that airport autonomous, and they're saying they will invest literally billions into autonomy because it's obvious. If they actually made a quote, they said that you could save on cargo. You've got these planes all over the place, but you know where everything is. You don't need somebody to drive a cargo truck to the plane. It can just go by itself, and you save so much cost, and also, issues with people and that sort of thing. It's an absolute no-brainer in my view. The market's massive, and we have the global leader, and that's where you should be. But I've said it before on this podcast. I'm saying it again. It's just I'm hearing it left, right, and centre. It's all coming shouting at me, and that's the way to play it. It's you've got to look at the future, not backwards. Is what I'm trying to say, basically, isn't it? Anyway, there you go.
There we go. And we also saw, obviously Donald Trump has been in the Middle East this week and increasing plane orders. And I think that BA separately the week before has announced increasing plane orders. So there's so much happening in that sector in terms of actual, growth and industry growth.
He did all right, didn't he, Donald Trump, going to the Middle East? He got a free jet. I mean, I never get one of those given to me when I go somewhere.
Well, that's because Andrew.
I can get a free golf ball.
I was going to say we've got the bribery act, Andrew. So you've got it limits you a bit. So golf balls, you're okay.
Anyway, that's it. Now, one other that we should just mention today because we've just closed a small deal for them. It is actually quite small. But Time to Act, which is basically it's listed on Aquis, it's quite small, but it's doing some really interesting things in the transitional energy space and energy security. And they basically at the moment got two different businesses. One is Diffusion Alloys up in Middlesbrough, and that's all involved, a lot of it in the hydrogen industry and the nuclear industry, who need this diffusion coating, which is a very specialist capability. And they have, I believe, totally, but they're not allowed to say it. They have to be very careful. The largest diffusion, what do you call it, in the world? Anyway, it's incredible. It's huge. And then they also have this other division, Green Spur, which has basically created an axial turbine generator for wind power, which we think is incredibly valuable. But we just raised them a little bit of money. It wasn't a huge amount, not easy in the current environment. But the point is that actually, in truth, they didn't really need any money, but it all helps to grow. And there's a lot of things going on here. And this is what I would say to people. Look, it is small. There's not a liquidity, but keep an eye on it because we really like the management team. They're doing all the right things. They're smart cookies. And there's a lot more to come from this, I think. How would you add on to that, Phil? You're the bloody analyst on it. Come on.
Yeah, exactly, Andrew. And we've just published some research today on it, where they announced that they are intending to raise the money. Look, from my perspective, what's interesting is that the coatings business is exposed to its specialist coatings to protect metal structures from corrosion and steam. Such use, for instance, in fuel cells, where there's a lot of moisture and high temperature about, but also, and importantly, blue hydrogen facilities used for coatings there, and for lead-cooled nuclear reactor technology. And this is an emerging technology. Lead cooling is also being looked under for the SMRs, the small modular reactors as well. So it's in some really good markets, and it has IP in terms of the wind turbine technology in Greensper for its axial flux motors. So yeah, it's an classic, interesting UK tech engineering company with some good growth prospects.
No, but interesting. We do have another coatings company called Hardide, which I visited a long, long time ago. Got a bloody speeding ticket going to visit them, which was really annoying, just outside Oxford. That's why I remember it. But it's quite different, and they shouldn't be compared really. But that's the UK is good at this particular skill, should we say? Even it's one of these sort of secret little skills we have in the UK. I was about to say something really intelligent. Suddenly it slipped my mind. Oh, I know what it was. So obviously one of their big customers is Johnson Matthey, and they have quite a close relationship there with Johnson Matthey. And they've got Johnson Matthey's got figures next week. I think you're going to go to it and see what they start saying about hydrogen. What they say about hydrogen is going to be quite important, isn't it?
Yes. Yep. They've got the full year results on Thursday next week, so I'll go along to the analyst meeting in the morning.
I mean, Johnson Matthey is a very interesting company. I think it's actually, a really good company, but the market has struggled with it. Should we say? Is that a fair way of putting it? Never quite knows where it's going. I mean, it's changed its strategy quite a few times in the last few years, hasn't it? I don't know. I don't know how well do you know it, Phil?
Not well enough. That's one of the reasons I'm going to the results meeting, is to see where they are in terms of the longer term strategy, because they've got the catalyst business, which is exposed to automotive, platinum group metals processing. I think it is. Andrew, you probably know a bit more about that, but it's for automotive catalyst, goes into obviously petrol, diesel vehicles, and you've had the EVs coming in, so it's like what's happening in automotive markets at the moment, because they're very, very mixed. So we'll see. But also, it's exposed to hydrogen.
Well, I mean, that's obviously why why it's doing so much strategic change, because of this changing, the whole catalytic market for vehicles, because of the EVs coming on. So it was a darling back in the sort of 90s and the noughties, and right up to about 2018, 19, it got up to £4. Today we're sitting at 100. It is pounds is the right word. So it got up to £40. Today we're sitting at £13.65. So it's come back a long, long way, and I find it very interesting. I think it's one of those stocks that one day may surprise us. But I don't know quite enough to give more of a recommendation than that. Yeah. Anyway, there's a little bit of a shout out for Johnson Matthey. Their figures coming up. What else? It's been quite quiet. What else you got, Phil?
Yeah, I was just going to say, I mean, keeping with sort of hydrogen and fuel cells, see the ITM Power. Another announcement this week. Now, ITM develops electrolyzer technology for green hydrogen production, but the market cap now is 277 million. The shares are up by 33% in the last 6 months, and that's because it keeps announcing very positive news flow. And I noticed an announcement this week that they'd signed an agreement with a customer, unnamed, because very often you have to go to customers to be publicly named, but and this is selection as a supplier of over 300 megawatts of electrolyzers to produce green hydrogen for a power plant in Asia Pacific region to reduce emission. And this is still, it's still awaiting final investment decision for funding. This is at the project end itself, but clearly a positive for ITM Power. I mean, it followed an announcement. I think it was just over a week ago. They got a contract for its electrolyzer system And this was for again a green hydrogen production process, but it's a 2 megawatt system. But there's been quite a bit of news recently from ITM Power.
I mean, it's funny how when news starts coming out, it's like buses, isn't it? You get them coming along in threes, and of course it has really pushed up the ITM price from very low levels. It has to be said, unfortunately. But then the whole transitional energy sector has been, let's be honest, it was in a pretty terrible state. But I mean, the price was down at like 25p. It's now nearly 45p. It's almost doubled just because suddenly all these buses have come along. Somebody said to me the other day, said, Andrew, you've been really quiet about Invinity Energy Systems. Have you gone off it? And I said, no, I haven't gone off it at all. I'm as committed as ever. But you got to wait for news flow before you start banging the drum. There's no point banging the drum when there's nothing news flow coming out. But you could easily, I feel, and I'm not quite sure with Invinity, see the same sort of thing. Suddenly there's a whole stream of news coming out and it'll do the same thing, just as ITM nearly doubled suddenly one day. But I don't know when it will happen. And I don't want to bang the drum endlessly because some people get bored of me doing it.
Yeah.
But I can see, so I have been keeping quite quiet about it, deliberately so, because I don't want to try and push water uphill. And there's other stocks to shout about, which are going up as we speak, so to speak. But yeah, one day you will probably come in, there'll be a whole stream of announcements coming out of them, and your stock will probably double again. I just don't know quite when it is, but if I knew, I wouldn't probably be able to tell you.
Exactly. Right. But I think the point is here is that even on the UK, the UK market is clearly that if you do get good news flow and regular news flow, it'll drive the price. I mean, if you look at another company that's had regular news flow in the tech space is Filtronic.
Oh, I knew you were going to say that.
Yeah. Well, if you look at that share price chart 5 years ago, it's electronics, exposed to electronic warfare and defense, but it's finally found its a real powerful niche for it, and it's in satellite communications. Clearly through its big supply agreements and investment from Starlink, the Elon Musk network. But look at that share price chart, Andrew. That was flat and low for a long time. And then along comes all this commercial progress and news flow. And it's now, 250 million market cap.
And of course, what investors will say, Phil, is they'll say, yeah, that's fine, Andrew. What we'll do is we'll buy it when the news flow starts coming out. We don't need to buy it until then. And it's a sort of a fair point. Some investors would rather wait and miss the first run to know that it's on a run rather than buying too early and sitting there, capital not being used. But it's sometimes when these things start to run, it's too difficult to then get in. But you've got to decide what sort of investor you are. There are different sorts of investors out there. Ultimately, though, if you've got a good product and good management and the stock price is cheap and you can be patient, which most investors should be, but most investors aren't, then it's safe to buy. Sit and wait. Does it matter? It's just a price on the screen. If you're going to hold the stock for 10 years, certainly with stocks that I buy personally for my pension fund and my wife's pension fund, little does she know what I'm up to though, I've got a 10-year time frame. So I just wait until I think a stock's cheap and then I buy it because I like it. And I don't really mind what the price does. It's just a price on the screen at that particular time. I'm holding it for 10 years. So as long as I think that between 0 and 10 years, it's going to go up enough to justify me buying it, I'll buy it. Very difficult to take that attitude. That's a very difficult thing to do in reality.
Yeah, absolutely. I mean, it's just human nature sometimes to, when we take a shorter term view or react to shorter term news.
Yeah.
But yeah,
right.
You do need to be patient. But so yeah, just quickly on to close on Filtronic. Actually, I mean, they announced a contract with Eutelsat OneWeb satellite network, and this is an Airbus is involved in this particular network, and it's launching satellites. But this was to provide its filter technology. So this is progress for Filtronic outside of the Starlink success that it's had, but good positive news.
Very good.
I guess I'll tell you what. A couple of things on AI. As I said, I've been at a couple of conferences this week, Andrew, on artificial intelligence, and you would have seen the results were out from Sage. Actually, they had their interims. The accounting. They were very good set of results, but they were also saying how they're now launching AI-powered services for and they've had real success actually. The Sage Copilot has been supplied to over 8,000 customers who are using this. But certainly from the sort of discussions I've been hearing this week about conferences now with artificial intelligence, clearly the money is still being spent on capital expenditure by by majors such as Microsoft and Google. But actually now software companies are launching very specific products for their clients. And there was a presentation by Lockheed Martin yesterday, their head of IT for Europe, and he was stressing some things about how they're using artificial intelligence at Lockheed Martin, clearly a big defense company, but this was for structural design, for aerospace design. But he was saying sort of importance on data quality, the IT infrastructure that you have, the staff that you have trained, and you have to have very focused applications. But also what was kind of caught my ear, as it were, was the cost of using it, because once you start using it, you suddenly find all of these potential applications, and it drains. It's a real drain on your IT resource and infrastructure, but also costs. So some important messages, but it's we're finally starting to see some real applications, successful applications for AI, and Sage themselves benefiting from it.
I mean, I think AI, autonomy, robotics, they're all very much together. I have mentioned historically, I haven't mentioned it for a while, I hate really recommending ETFs because I always think it takes away from my business, but I do personally own an iShare ETF, what do you want to call it? And the iShare is automation and robotics. And actually, I mean, I've held it now probably about 8 years or something, but it's doubled in 8 years. It had a bit of a fall off when Trump came into power because everyone was worried, of course, but it's now rallying quickly. Actually, it's more than double. I think it's triple probably. But that's the sort of thing where you buy it and you sit on it for years and years and years, and it will just, because it is an area that is just growing, and it's an unstoppable. It's a rolling stone. It's a snowball going down the mountain. All of these things. It's an unstoppable way we are going. Automation, robotics, AI. That's the way the world's going. There's a very safe way of playing. You don't have to stock a pick. It's just an iShare.
Yeah. It's a what do call it? Was it structural growth theme?
Yeah, correct.
In the market long term.
All right. Anything else, Phil? Or we'll let the listeners get back to their day job.
I think we should do that, Andrew.
All right. You may or may not get us next week. If you do, it'll have an American twang to it. See you all next week.
See, Andrew.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.